Good morning, traders. It's 8:02 a.m. Chicago time on Friday, the 19th of January, 2018. Thanks for joining me, and happy Friday to everybody. Hopefully, the sound is coming across nice and clear today. No distortion. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we have strong European markets. The DAX is up 1.2%, 159 points. Euro stocks up 30.83. Gold is stronger. We have somewhat of a mixed bag again. E-mini NASDAQ is up 24 points, while the S&P is only up 4.25. I'm seeing the indices intermixed with treasuries, the yen, and other safety assets. Gold is trading $13.34, up $1, up $6.80, or 0.5%. The laggards today are crude oil, down over 1%, 1.1%, trading at 63.18. Remember, crude oil, we're trading March currently. That's the front month. Again, crude oil March, so that's the H18 or H8 contract. The bonds and the euro are below zero. As far as what we're looking for, interesting, some news just came across that the Canadian government is setting up its own blockchain system to start interacting in blockchain technology, and that's I haven't looked at what the cryptos are doing, the major cryptos are doing, but thought I'd share that. The other thing is the Fed came out and said that this was at 3 a.m. Chicago time, 4 a.m. Eastern. The Fed said it has a proposal to ease up on bank leverage ratios, and this could result in banks having billions of dollars of freed up capital. So I'm looking at how the bank index is going to respond this morning. As far as what economic releases there are, we have a key figure this morning, 10 a.m. Eastern, University of Michigan confidence. For January, expecting 97. Last is 95.9. And then we're looking for a Fed speaker, Quarles. I'm not sure if that's how the name is said. At 1 o'clock Eastern. Let's look at yesterday. Yesterday, given the overnight stance and action, given what we have done over the last few days, the context of what we have done over the last 2 days, the expectation coming into yesterday was for a balanced day. Talked about that a fair amount, and so we're looking for wider swings on the open, an attempt at 28.04, and then sideways with a balanced profile. So I drew that balanced profile there. So I'm not looking for breakouts. I did mention in yesterday's video that I'm looking to trade from the outside in. Which means that we're looking for the market to make moves or rotations that are outsized, and then to fade those or to trade against them, to trade in the opposite direction. That's basically what happened. I'm not sure if all you watched the markets yesterday, but there are some pretty good opportunities to fade. We had a wide opening swing from 27.9975 to 28.0650. So we closed that point of control to the upside, and then we started to swing back and forth. Nothing to do here. Extends the opening swing down, and on this pop lower, we have an opportunity to get long back into balance. Same thing here. We ended up extending the range downwards, meaning breaking the IB low. But again, this is an open auction, outside in day. You don't want to lean on the mid on a day like this. The mid is this dark blue line right here. Okay, this dark blue line. So some characteristics of a neutral day or of a balanced day. Market swings back and forth, keeps tiptoeing in and out of the opening swing. You generally have VWAP and mid stuck together. You generally have, if I put up the developing point of control, let's add that. It'll be a white line. There's that white line. You'll notice that as the day goes on, the developing point of control, let me make that line really, really thick so you can see the point that I'm trying to make here. Okay. You'll see this is the developing point of control. You'll see that the developing point of control is constantly chasing VWAP and mid. See that? These are stuck together all day long. You can see them stuck together, and here they're kind of converging together. And so that's another sign that you want to you want to stay away from the mid, short, or long. You don't want to trade off the mid in those situations, at least in not my plan. Now there are opportunities in here to do that. There's some here and so on here maybe, but I'm not going to trade off the mid if I'm trading from the outside in. Now what the mid becomes is a target. The mid is a target for an outside in trade. So as I'm pushing from the outside in, I'm looking to the mid as one of the key targets. I'm looking for VPOC as one of the key targets. And then I would let a runner go, but very, very light. By the way, outside in trading means trading more often, trading more like a scalper, trading lower size, usually half a unit, quarter units more common, and then trading from the outside in. If the market happens to make an outsized rotation, so if I'm looking for an outsized rotation, right? So the market drops, say, 7 points, and then pulls back to mid or less, and then continues to extend, I'm off that plan. I'm no longer looking at a market to trade from the outside in. Usually that results in a loss, and that's just some information I just bought with that stop. And so that's one way to look at it. Of course, if you're trading a small account, it's really hard to afford to do that, but then futures are very leveraged and they're hard to trade with a small account. Anyway, let me get rid of this thick white line just so it's not obscuring things. There we go. So that's what we ended up with. What do we have? We have a balanced profile. Again, market the point of control inside of the opening swing against the mid against VWAP. Neutral day, broke top and bottom. Non-directional day, and what we have coming into the overnight session to carry the context forward. Remember, this is how you've seen this every day. This is how I can determine to a tradable degree, I want to say. I don't want to say accurate because I'm not accurate. I'm not accurate. I'm definitely not precise. Just carrying the story forward is really important to determine what is likely to happen. Now, what do we have in today's trade? We have very high volume, right? Double the normal volume. Let's look at that. Volume is shown up here, 224 right there, right? We expect about 110 to 125 or so thousand for the overnight session. We have wide range on the overnight session, a fair amount of news during the overnight session. And so we have a wide range, wide volume. The market is battling both ways. Has it accomplished anything? What has the market done? What has the market done? It has tested up off the open before any news occurred during the Asian session. Then it fell right after the Asian Open. Then it rallied all the way up near the high of yesterday, up to 28.06. Then it fell through the mid, down to the mid, and is holding steady against the point of control. We have a triple distribution profile, 3 distributions. What does this say about the session? It says several things. I wish I could type them out here, but it'll take me forever. It says, 1, the market was very active. Okay, there was a lot of participation. 2, it has tested below yesterday's low. It has tested almost yesterday's high from a price action perspective and has not accomplished anything other than to test. It did not gain any ground. It did not lose any ground. So 3, that tells us that both sides are active. Price discovery is fluid, right? There's a lot of price discovery going on. There's no consensus yet. We don't have a normally distributed profile that everybody agrees on. That's what a normally distributed profile looks like. Yesterday we had some consensus. Okay. The night before we had a lot of consensus, but today no consensus. So knowing what it has done, what it is trying to do, it's trying to test down, failed, tried to test up, failed. And how good of a job? It's doing a really good job exploring. It's not finding consensus based on the auction, based on the volume profile, as well as the price, as well as the price action with high volume. This means that the both sides are active up here and it's contested. And if it's contested, what do you expect the open to look like once the stock market kicks in? If it's doing this overnight, what's it going to be like when it opens up, right? So that's the question we're answering with our primary scenario. What is the most likely action going forward? Before we do that, I want to take a quick look and review what we've done for the week just to keep things in context. Higher low, higher high. So one time framing up continues on the weekly all the way from December. Continues. How are we doing on a daily basis? Split the profile. On a daily basis, we have a short week. Tuesday, Wednesday, Thursday. We tested down into the prior, we gapped up, we tested into the prior profile. We closed the single prints from the prior week. We found a base. We have an excess low, right? So we have single prints closed down here. We have an excess low. The market catapults right back up and holds sideways. This is overall still bullish. This is a threat to shorts on a swing basis, in my opinion. And so overall, the market is relatively strong. So what do we expect going into this morning? We expect an open auction that is likely to be wide. Okay, so we're looking for a wide open auction. We're looking for the value levels to be tested, 28.0275 down to 27.97 and a quarter. Expecting those to be tested. So this peaks down like this. And then I expect one side to lose this battle. I'm looking for an impulse up. Take out yesterday's high. Take out the overnight high for that stat. Push through the all-time highs. And then finish somewhere in the middle. So 27.97 to about 28.10. 28.10 or higher, 28.1350 potentially. This is our big target from yesterday that we didn't touch. That's the primary scenario. I expect that there will be a battle early on. I expect that one side is likely to lose this battle, which will likely fuel this impulse, and then I look for the impulse to have a continuation, consolidate and have a continuation. Given that it's Friday, it is likely to slow down later in the session. Not always. The last that has not been consistent lately. Fridays have been fairly active, relatively active, and then I'm looking for it to correct on the close. That's the primary trade idea for today. Okay. Now there's this thing looming right? Which plays into scenario number 2. There's this fight going on within our government, and they're back and forth with this keeping the government open. And as it sits right now, it looks like our government's going to be shut down for a couple of days. They're running out of budget. And so this is likely to push us around a little bit. It seems like the market doesn't really care about that as much as it used to. I remember back in 2006 or 5, when the market was threatening to when the government was threatening to shut down, the market was taking wide rotations. But now, with earnings being as strong as they have been, and good news coming in for the financials this morning from the Fed, this Fed proposal, I'm thinking it's likely to, I expect that it's likely to resolve to the upside, even if you don't consider news, which is hard to consider in your trading. Your overall price action and context is pushing to the upside. I mean, we have a test, push higher, higher high, pull back. We didn't even, we pulled back to yesterday, the prior day's mid right here, right? The LVN and mid, and held. This is a flag. This is a sort of a flag pattern for a likely continuation higher. It's just a matter of time. So with bad news coming out of this budget thing or a weakness, I'm looking for wide swings on the open, test higher, look for that push into the upper high volume node, impulse down into the overnight below yesterday's low. Hold this 2790 to 2788 area, bounce back up for a small distribution up top, fatter distribution down below into the close. So that's what I'm looking for on scenario number 2. So I've talked about again and again and again, how do I trade that? I trade it by looking at and leaning against. Let's switch this back. Testing out the new settings in Bookmap. I'm looking for, how does this book stack up when the open happens? Do I get a lot of yellows and oranges up here, and the market comes up and it's just banging and banging and banging away at it and unable to make progress when the market is lifting? And this is where you can ignore order flow as a swing trader. It's not a problem. But as a short-term trader, order flow is just, for me, I don't know how I would trade if I didn't have order flow. I'd have to use really wide stops, cut my size a lot, and just let the market do its swings. But if the market comes up and it starts banging away at, say, this orange, which is the heaviest offer currently in the book, if it bangs away on this orange and makes no progress, it's just, you see big circles, big Bookmap circles, green, and hammering and hammering and hammering at that price, but not making progress. The rotation is fairly quick, and that's what I'm looking for. A quick rotation, put on the trade, hit the bid, put on the trade, look for the market to stabilize back in the zipper, and then wait for it to break through. Or if it doesn't break through, consolidates and comes back up, I'm out. But if it breaks through the zipper, then start to look for the next key areas down. This is, of course, pre-market. This is not how the book is going to look. The heat map is not going to look like that once the market opens. But we'll see. We'll see how it looks like when it opens, and then I start to lean against my plan as outlined based on what the market has done. Okay, so it's not just theory. This isn't me talking up a big game or whatever. I'm sharing with you what I'm doing and how I'm executing. And on my Twitter feed, if you're not on there, I'm updating that throughout the day just as I see it. As best as I can, because I can't type and focus on the market at the same time, although I've gotten pretty good at it. So that's what I have. Please take a moment today to hit the like button. It is Like Friday. Please, please, please take a moment, hit the button. It doesn't cost you anything. Just hit the like button so that it can help me out. And then I'll catch you. This is Friday. Don't forget that Friday is not a day you want to fight the market. You don't want to ruin your weekend. Going into a weekend with a 20, 30, 40% loss on your equity in your account. Good luck.